This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on February the 8th, 2013. Our time is 8:38 Mountain, 10:38 Eastern. Radio show runs News Talk 1010 in Toronto. Also 6:30 CHED Edmonton, QR 77 in Calgary. We're on the radio. We're online. Harold's websites, rarecoloreddiamonds.com, HESradio.com. The shows are archived there. You can be a part of our podcast. The show is portable on an iPhone, iPad, iPod. All you need to do is have iTunes on your portable device. The show is portable. Just type in World Financial Report on radio, and you can have our show with you anywhere you go. It was another interesting week in the financial markets. A lot of talk about currency wars. We'll talk about that in today's show. Also, March 1st, the United States and their politicians, sequestration is kicking in. That means massive spending cuts that were imposed a couple of years ago when they raised the debt ceiling. They averted a crisis and put sequestration in place, these automatic cuts. They need to deal with that very, very soon, or there are going to be some serious cuts to the U.S. government. Also, the U.S. Fed, and this is a very interesting statistic, that the U.S. Fed has bought more U.S. government debt this year than the Treasury has issued. Just imagine what will happen when that stops and interest rates have to go back to normal. The other story that was interesting this week, heavy insider trading and actually selling of stocks on the New York Stock Exchange. In fact, about 9-to-1 selling to buying. The insiders, that's what they're doing on the New York Stock Exchange, the companies listed there. Harold, now is a time for caution. We don't know exactly when some of these issues, whether it be geopolitically or financially, are going to kick up, but we do know it's going to happen. It's just a matter of the timing. People need to be defensive, position themselves accordingly, because we're in a scenario right now where if things go bad, a lot of people could be hurt in the stock market. A lot of people could be hurt in the bond market. In fact, some trader has made a very big bet that something very bad will happen within the next 60 days, according to UBS's Art Cashin. Some options trader has made an enormous $11.25 million bet that the VIX will explode higher very soon, and a rally in the VIX is usually accompanied by a drop in the stock market. So we're at a time right now for extreme caution.
You certainly are, Randy, and all of us are. It's a very, very concerning and difficult time and confusing, and, you know, people are wondering what's happening with the metals. Why are the markets doing what they're doing? You know, the fact is that right now the gold and silver are trading in a range. It's been a bit volatile, but it's trading within the range, and we need to see that market break out. But the thing is that we're not traders. If you're holders of gold and silver, you're not trading the market. You're not buying it and selling it, you know, on a short-term move type of thing. People that do that tend to lose most of their money trading. You want to buy and hold this market because there is no doubt in my mind and many other people's mind that it's inevitable. The market has got to go substantially higher than where it is, and all it's doing at this point here is posturing, is trading within a range. As we're taping the show today, on Friday, gold's up about $1 on the day. It's at $1,672. Short term, we need to break 1,700. That shouldn't be a big deal, but it's tried to break it 3 times and has been unsuccessful doing so. 1,700 is only a minor resistance level. We should have been able to break through that market, however. We haven't in the past few weeks, but I do believe that will happen in the very short term. The real important numbers for gold are 1,800 and then 1,920. 1,800 is a very heavy resistance level, and that's about $130 away from where gold is right now. And then 1,920 is the all-time high for gold, and we need to break above that to see the market obviously go into the $2,000, $2,200 level, which I also believe will happen, and there's a very good chance that that could happen this year. Very similar situation in silver. Silver had trouble breaking above 32.50, which shouldn't be a major big deal, but it's trading in a fairly tight range. As we're taping the show on Friday, we're at 31.78. We're up 22 cents. The fact is that silver needs to break short-term 32.50, but the bigger numbers are $38, $50, and $44, and we need to obviously break $44 and able to get to the all-time high of $50 silver. Platinum's been on fire. Platinum's up another $10 today. We're trading at $1,732. We're now $60 above the price of gold. For the last year and a half to 2 years, gold has been more expensive than platinum. Now platinum has taken over. There's mine closures, a lot in Russia, and the fact is that platinum and palladium are used in catalytic converters in the automobile industry. So platinum's up $10, doing extremely well. Palladium's up another $2 today, trading at $757. It's possible that palladium could break 1,000 and go as high as $1,100 to $1,200. So again, we need to break out. By the way, on the downside, these are the important numbers for gold. We don't want to see gold break 1,600, obviously. There's very heavy support in the market at 1,600, but the heaviest support is at 1,520. That was a low that we saw in 2011 when gold dropped from 1,920 down to 1,520, and silver dropped from 50 down to 26. Reason for that was nothing technical, nothing fundamental. It was all manipulated. It was caused by the exchanges where gold and silver is traded, and what they did is they raised the margin requirements and made it so expensive to trade gold and silver that a lot of futures traders dropped out and sold their positions, and that's why the market fell down. So the major support level for silver, major support, is at $26. And the fact is that I doubt that we're going to see those prices again. We could wake up one morning in the very near future and see gold up $100 and silver up $2, $3 on the day. We've seen it happen before, and I am betting that it will happen again. As we're taping the show, the stock market's up. The Dow is up 75 points, broken above the 14,000 level at 14,019. Be very, very cautious of that market. The fact is that we've seen in the past huge declines in stocks, when the markets get overbought and heavily leveraged like they are at this particular point. So again, we've seen this happen before, and don't forget the Dow has dropped from 14,000 to 6,500 and took away most people's money. If you're in your 50s, 60s, and 70s, you cannot afford to lose in these markets anymore, because it's not the 90s anymore where you could make money in the stock market and real estate market. It's much, much more difficult now. You've got the TSX trading up 45 points today at 12,801. The U.S. dollar, which rallied strong on Thursday, is down on Friday, down 11 points at 80.15. We need to see the U.S. dollar drop below 78.50. That's a heavy support level for the U.S. dollar. Once it breaks the 78.50 level, which I believe it will, the next major level is 75 and then 72.50. If we get the U.S. dollar back down to 72.50, which was the lowest that we saw, and that happened in 2011, you'll see gold go up to 2,000 and silver go up to, probably $60, $70. So there's a direct correlation between the U.S. dollar and the gold and silver markets. As the U.S. dollar falls, gold and silver goes higher. The crude oil market has seen a little bit of profit taking, but nothing severe, and as we're taping the show this Friday, oil is now up 61 cents and trading at 96.44. We're very bullish on oil. We may be one of the only firms that are, but we're very bullish on oil, and with what's happening in the shortages in the market, believe it or not, and what's happening with the potential fear that Israel and Iran and Syria and Egypt and all will get into it by the summer, you're potentially looking at oil going to 150 to 170 this year, and possibly even higher than that. So when you look at a situation like we're faced with right now, why would you want to own gold and silver and diamonds at this particular point? Three major reasons is that higher oil prices. High oil prices, gasoline prices increased in the U.S. 17 cents this week. On top of that, you've got a worldwide food prices are surging at a time when there's currency devaluation and currency wars going all over the place. The U.S. dollar is weak. The euro has dropped off this week. The Japanese yen is going to be in huge trouble because Japan decided to drop interest rates down to zero, which is, again, going to bring on massive inflation. So when you have a weak currency, a currency that doesn't buy so much, and then you raise the price of the staples like oil and food, there's no doubt we're going to have inflation. And now you got to go back to history. 79 and 80 when we had double-digit inflation and we had $850 gold, $50 silver, and 500% up in diamonds. That's what we saw back then. That's what I believe we're going to see again, massive rallies in the hard asset market. And again, I'm a big believer in insurance because in 35 years in the financial business, I've seen it all. The inflation, the high interest rates, the debasement of currencies, stock markets plummeting and rallying, gold prices doing everything. I've seen it all, and I've been through these markets before. I'm extremely conservative. We're not heavily leverage anything, and at this point, if you believe in insurance on your car, your home, your life, your health, and everything, you need to insure your financial situation. You need to own the type of assets that will protect you against currency devaluation and inflation, and there is absolutely no doubt that that's coming. You need to own physical gold, silver, and diamonds. That's my top recommendation at this time.
Speak with Worldwide Precious Metals to start your own precious metals investment account today. This is the company that Harold recommends you use, a Canadian company in business for over 10 years. Their website, wwpmc.com, telephone number 1-866-623-2002, 1-866-623-2002. And keep in mind, this is a liquid asset. You can buy and sell with a phone call, secure storage, insured to the full value of your investment, 24/7 online access, and you will have a full-time investment specialist to help you in this very specialized market. That's why you want to deal with Worldwide Precious Metals. They're the only ones that specialize in precious metals. You have a lot of other people offering precious metals, but truthfully, they don't specialize in it the way Worldwide does. They're the experts in this very specialized field. Speak with them. wwpmc.com, telephone number 1-866-623-2002. In our newsletter this week, you can get our newsletter free of charge from Worldwide. We have a quote from Mark Faber. He was on CNBC being interviewed by Maria Bartiromo as to why he never stops buying gold. He says, "You see, Maria, I want to tell you, I buy gold because I am fearful. I am sorry to say, Maria, you do not own any gold, and you are in grave danger because you do not own any gold." It was an interesting interview that Mark Faber had with Maria Bartiromo. You look at what's happening in the United States. We touched on sequestration, the U.S. politicians getting through the fiscal cliff, kicking the can down the road. More than likely now it looks like they will kick the can down the road on some very severe cuts. But what is coming in the years ahead is a big decline in U.S. government spending. And we saw what happened to the GDP numbers here about a week ago with government spending reduced in the area of the Army and the Navy, the military. It took a huge hit. So this is something that's going to be a force to consider in the future when it comes to your investments. If the United States does pull back their spending, does the Fed continue to print money in a way to prop up the economy? Time will tell. The other thing that Harold and I thought was very interesting, we put it in the newsletter, nearly half of American families are living on the edge of financial ruin. A sobering new report by the Corporation for Enterprise Development shows nearly half of U.S. households, 132.1 million, don't have enough savings to weather emergencies or finance long-term needs like college tuition, health care, and housing. And now they are being hit with higher payroll taxes as a result of the fiscal cliff deal. Millions of Americans are feeling the bite from the sharp increase in payroll taxes that took effect in January. There are growing signs that the broader economy is suffering too. Chain store sales have weakened over the course of the month, and 2 surveys released last week suggest the consumer confidence was eroding, especially among lower-income Americans. So I find it interesting on some level, Harold. U.S. President Obama gets reelected. He promised more taxes. We're starting to see the effects of that for the average person. And on top of it, you have the government pulling back. I see this as a recipe for disaster for the United States. It's starting to culminate in a situation where the Fed may be the only thing that can try and save the U.S. Economy and government. But the truth of the matter is there's only so much they can do.
You better believe it, Randy. And again, the amount of debt that they're holding at this particular point is absolutely ridiculous. I mean, it's almost like a joke because it just keeps getting bigger and bigger and bigger. And we all know that there has to be a point where you say enough is enough. And either it's going to work or it's not going to work. And there's a lot of people out there that are very, very intelligent that believe the route that the U.S. government and the Federal Reserve is going is going to be disastrous. But again, everybody has their opinion on what's happening in the market. When you buy a stock, you buy it from somebody who's selling it. So everybody has their own opinion on the market. Some people are bullish, some people are bearish. The fact is that we're realists. We look at things that they're so difficult to understand at this particular point and so risky that you need to just take out insurance. You need to protect yourself just in case anything happens, because we don't know exactly what's going to happen at what particular point. When you look at the financial markets the way they're situated at this point, you have to see inflation coming because they keep reducing the value of the dollar and it doesn't buy as much. And that would be okay if the price of oil was down to $20 or $30. But oil's approaching $100, and there's just no way in the world that we're not going to have inflation. The other thing is the report that Randy just mentioned about half the households in the United States on the verge of financial catastrophe, they don't have money to spend. They don't even have $10,000 net worth to their name. So how in the world is a country going to recover when it's all based on consumer spending? The only way that the country is going to get out of trouble is when the economy improves and people start to work again and spend money. But the baby boomers are not spending any money. They don't have it. They can't even retire at this point. And 50% of the kids out of college don't have a job. So how in the world is the stock market rallying to over 14,000 when there's such disarray in the United States in all the financial markets?
Very, very strange. A lot of it, we believe, is quantitative easing. Speak with Worldwide Precious Metals. They're the experts in this very specialized field. Start your own precious metals investment account today. 1-866-623-2002. 1-866-623-2002. Give them a chance to earn your business. They will educate you as to why you should be in gold, silver, platinum, palladium. Their website is wwpmc.com. If you would like to receive our free weekly newsletter from them, they will be more than happy to send it to you. We send it out by email every week. If you'd like to receive it, speak with Worldwide Precious Metals. Bill Buckler, and this is a quote from our newsletter, was quoted from Gold This Week on February the 2nd via Ed Steer and his daily newsletter from Casey Research. The blatant manipulation of paper to control the price of physical metal is ongoing and getting more blatant by the month. The more debt that central banks monetize, the more vital it is that there are no distractions in this process. It's crucial to keep everybody inside the paper money and sovereign debt system. It's equally crucial, therefore, to discourage any temptations to venture outside it. And Harold, I agree with that statement 100%. I believe that is 100% accurate. But it will be just a matter of the timing before the average person wakes up and realizes they need to get into hard assets to protect their wealth because they are being manipulated by governments.
You know, it's concerning to know that really does go on. I mean, the markets are supposed to be free markets. You're supposed to, if you put up your money and you're willing to take the risk, you should be able to put your money into a fair marketplace, not one that is manipulated or controlled for the betterment of the government or the economy. I can understand that we want to get the economy back on track. Everybody does. But to the point to where you lose credibility by trading markets or forcing markets up or down for the benefit of, you know, posturing type of thing, again, I think that's worse than what the end result is going to be, because nobody will have faith in the markets if they're continuing to be manipulated and traded in the fashion that they are. Again, you're just not playing at times on a fair playing field.
The truth is, all markets right now are being manipulated. That's just the sad truth. But we believe with a hard asset, it's something you can hold in your hand. It cannot be printed. You can't print gold, silver, and diamonds. We know that's solid. You can hold it in your hand. The paper products, obviously, a huge concern. That's why we're starting to see massive concern about currency wars all around the world. 1-866-623-2002. Start your own precious metals investment account today. Remember, this is a liquid asset you can buy and sell with a phone call and speak with Worldwide. Let them earn your business. Start a precious metals investment account today. www.pmc.com, 1-866-623-2002. Some of the quotes from our newsletter this week. Fred Hickey saying, as long as we have unlimited quantitative easing, we have the potential for unlimited gains in the gold price. Agree with that. Stephen Lieb. Now, can I tell you gold is going to take off in the next 6 months, next 6 hours, or next 6 days? No. But when gold does take off, the world will see an acceleration of the gold bull market at that point, and everyone is going to be shocked and surprised. Roger Wygant saying, it's obvious to us that hard assets are the answer. It starts with physical gold and silver. Somebody please tell us when global bond markets crash for good, and we'll tell you this can obviously be a starting over point with maybe a gold-backed currency. Ron Rosen saying silver and gold leave no doubt whatsoever that they must be owned by all who want to prosper and survive in the future. The only questions are which one will get to the finish line first and just how high will the price be. Also, Cesar Bryant from Gabelli and Company saying, so in an environment of sluggish economic growth and high debt levels, we believe monetary policy will remain highly accommodative. The assets of central banks will likely start to expand after a quiet period, and the gold price will probably take notice of this and begin a fresh upward move. The bottom line is we are expecting new highs in the gold price, and they believe that the next move up could be very, very substantial, Harold.
I think it will too, because again, you've got two different markets. You've got the paper market that trades the futures markets and the ETF market type of thing, and then you've got the physical market. And we've read many reports that the governments, mostly the U.S. government, is short on silver. They can't mint their 1-ounce silver coins. So how in the world is silver not skyrocketing when there's a shortage and they can't even print their coins? If that was wheat, as an example, and there was no more wheat, and they announced that they won't have wheat for a year or two, the price would go to $100, and a loaf of bread would be $20 a loaf. Same thing with oil. If they announced that there was no more oil, the prices would go ballistic. So why in the world did the price of silver not go mainstream type of thing when they announced 2 weeks ago that the American government and the mint doesn't have any silver to mint any coins? It doesn't make any sense to me, Randy.
It doesn't to me either. It's just a matter of the timing. This reminds me, I remember talking about prior to the financial crisis, how serious the situation was to a friend. And he said, well, when is this going to happen? You keep talking about it, but when is it going to happen? I said, I don't know the exact date of when it's going to happen, but I believe it will be very soon, and it was within roughly a year. And I think I'm getting that same feeling that what's happening, as we touched on the last show, the central banks around the world with their money printing are really walking a fine line. How do they get out of this? How do they go back to normalized interest rates? How do they get away from the quantitative easing and ease everybody back into normalized markets? When it was interesting, I was watching Bloomberg, they had Barry Ritholtz on, and he believes that the stock market would be 20 to 30% lower if we did not have quantitative easing. So if you take quantitative easing out of the mix, it's serious ramifications for the U.S. economy, and then you add in it to sequestration, massive deficits. In fact, Robert Fitzwilson said this week Shadow Stats has estimated that the annual federal deficit for last year was really about $6.6 trillion, not over $1 trillion. One included all the accrued liabilities and expenditures, not included in the $1 trillion estimate for the deficit. The Fed has announced an indefinite printing of $85 billion per month. We consider that to be a true estimate of the on-book deficit. And he goes on to say, there was even a call last week to print $30 trillion. It's completely out of control. And he also goes on to say that we are now getting ready for unlimited financial defibrillation. A call went out last week for the $30 trillion. Why stop there? We have over $200 trillion of unfunded obligations, and the pile grows every year with unending deficits. They won't stop. They can't stop. An investor Well, what can we do? We can only try and get out of the way of this runaway train. The conditions of an economic kill shot are in place with interest rates near zero, huge financial obligations on the books, and more deficits to come. A sudden rise in rates would likely cause the financial system to melt down. The only path for investors is debt reduction and to convert to tangible assets. That from Robert Fitzwilson, and we have about a minute left here, Harold. I agree with him 100%.
So do I, Randy. Again, we just need to be very, very cautious. There's so many landmines out there that could hurt us. I've always been concerned tremendously over the derivative market, which, again, is a market that most people don't understand, but the banks and brokerage firms buy like crazy. It brought down Lehman Brothers, and, again, it's a quadrillion-dollar market, and it's unregulated. So, again, the landmines are out there. We just got to be cautious. We got to do the right thing. Owning gold, silver, and diamonds, in my opinion, will get us through these difficult times.
Have that insurance policy in your portfolio. Speak with Worldwide Precious Metals, wwpmc.com, or call them at 1-866-623-2002. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping this show on February the 8th, 2013. Our time is 9:06 Mountain, 11:06 Eastern. Radio show runs on the legendary CFRB News Talk 1010 in Toronto, 630 CHED in Edmonton, QR77 in Calgary. We're on the radio. We're online on Harold's websites, rarecoloreddiamonds.com and HESradio.com. And don't forget, we have a podcast, too, through iTunes. We're portable on your iPhone, iPad, iPod, any portable device. Get iTunes on there, and you can listen to our radio show anywhere you go. When it comes to investing in precious metals, there's only one company Harold recommends you use and trust. That is Worldwide Precious Metals, a Canadian company. And they've been in business over 10 years. They specialize in this precious metals field. That's all they do. That's why you want to deal with them, because they're the experts in this very specialized field. Their telephone number, 1-866-623-2002. Their website, wwpmc.com. Let them educate you about this market, why you should start your own precious metals investment account today. You can be involved and find out how much investment is obviously encouraged. You can set up your own precious metals investment account. It is a liquid asset. You can buy and sell out when you want. There's secure storage, insured to the full value of your investment, 24/7 online access, and full-time service. Speak with Worldwide about starting a precious metals investment account today. wwpmc.com. Telephone number 1-866-623-2002. RareColoredDiamonds.com is Harold's website, RareColoredDiamonds.com. You can speak with Harold about diamonds at 1-800-432-1022. Our featured diamond this week is a stunning 0.56 carat radiant cut, fancy, vivid, purple, pink Argyle diamond. It's absolutely gorgeous, and we have an article to go along with it, In the Land of the Great Pink Diamond. Encourage you to read that and get that from Harold. In fact, in the newsletter, we have a picture as a reminder. This is a glass flute, a glass full. A goblet represents 95% of the world's annual production of pink diamonds. And there it is in a champagne goblet flute. Harold, it really puts into perspective how rare this diamond market is, in particular pinks.
Yes, certainly. I love that picture. And again, it does certainly give the true indication as to what that pink diamond market is all about. We know that the mine is going to close in 2018, which is only 5 years from now, and give it 2 years for those diamonds to run out. I believe pink diamonds from the Argyle mine are amongst the best investments that you could make. It's like anything else. It's a commodity, and there's supply and demand. That's always what moves a commodity. When the demand for a product is high and the supplies are low, the prices always go up. And that's exactly what's happening with Argyle. In fact, for those that are in the Argyle pink diamond market that own Argyle pinks, have seen approximately a 25% increase in the price of Argyle pink diamonds every single year. But what's going to start to happen now is that these diamonds are going to start to move up more than that, because the closer we get to the mine shutting down, the higher and higher these prices are going to go as investors realize that there's just not going to be any more of these diamonds available. And they're so beautiful. They're the most concentrated form of wealth in the world, and they are absolutely stunning. I know myself as a businessman, I've invested most of my financial dollars into the Argyle pink diamond market for the next 5 years. I believe that they're going to go up 8 to 10 times what the prices are today, and I believe my clients are going to do extremely well, as will my company from Argyle Pinks. And after that happens, I highly doubt that we'll ever see another opportunity to see this happen again, because the diamond market is extremely small, but there's only a few types of diamonds that are extremely popular where there would be a shortage, and those would be the Argyle Pinks and the blue diamonds that happened back in 2005 when they went up the same thing, about 800 to 1,000%, because of the lack of blue diamonds on the market. So that particular diamond that is the featured diamond this week is one of the most beautiful diamonds you'll ever see. People may say it's only a half a carat. A half a carat for an Argyle pink is considered a very large diamond. In fact, what Argyle does every year is they choose 55 of their best diamonds. It's called the Argyle Tender, and they take those diamonds on, they take them to 6 different countries around the world, and they show them to very high-end dealers and jewelers. And most of these diamonds are bought by jewelers, and they put these magnificent diamonds into very, very high-end jewelry pieces, rings, earrings, necklaces type of thing. So most of these diamonds do not come back onto the market. So you're talking about a tiny little market in diamonds of about 200 carats a year. A lot of those diamonds don't even will not even be seen again. They'll put into jewelry pieces and worn for many, many years, and then handed down from generation to generation. We're really the firm that took this diamond market to a level of investments. And the fact is that, let's be serious about it. An investment is only a good investment if it can be resold again. And in the diamond business, what's happened over the years is that people have bought diamonds through jewelers mostly, and over time, if they wanted to resell them, they'd go back to that same jeweler and say, I bought this diamond ring from you 5-6 years ago, and I'd like to sell it. And then in most cases, you find that the jeweler doesn't give you back even what you paid for it. That doesn't mean that it's not a good investment. What it does mean is that there was never a market to resell it. And as a businessman, I always understood that. So what we did 2 years ago was build the secondary market to resell these diamonds, and really made the investment business in diamond what it is today. So we own H. Siegel Fine Auctions, the only real-time live auction house that resells our clients' diamonds. We've had 9 auctions. All have been extremely successful. The last auction we had a couple of weeks ago, we sold every diamond that was put up on the website. We have clients all over the world that bid on our clients' diamonds. And that's what we built, was the secondary market to resell diamonds. Now I believe that the diamond market is a viable market to invest in. So we had 8 Argyle pink diamonds up at auction. Every one of them sold, and we had a 141 fancy yellow flawless in a Tiffany ring, and that also sold. And then we had 7 gold and silver magnificent collectible pieces, and they all sold also. We sold 100% of what was put up at auction within an hour. That's how excited the world is about the hard asset market. We have had the largest amount of people ever attend our auction at the last auction. I hired a PR firm in the U.S. to take us to another level. We want to be in the Orient, and we want to be in South America, and we want to be heavily in Europe. Most of our business and most of our clients that we take care of are our Canadian clients. I'm Canadian, Randy's Canadian, our radio shows are Canadian, so we always take care of our clients. But these Argyle pinks, especially the Argyle diamond that was up as the featured diamond this week, is an absolutely spectacular diamond. You could tell by looking at the video that it's almost red in color, and red diamonds are the most expensive of all diamonds. So a vivid pink Argyle, they're doubling now every 2.5 years. If you could ever get your hands on one, they're one of the best investments that you'll ever make. They never, ever go down in value. Now, let me say, they're not cheap. they're expensive diamonds, but nothing compared to where they're going to be 5, 6, 7 years from now. A diamond that you could buy today for $50,000 could be a $400,000 to $500,000 diamond in the next 7 years. A $100,000 Argyle pink could turn out to be $1 million diamond in the next 8 to 10 years. So the fact is we all work hard. If you put your money away and you put it in an RSP, I think you're going to agree with me that you're seeing no returns on your RSP. You've been in it for probably the last 5 to 10 years, and you've seen no increase or no profits over the 10 years. So how in the world is that a good investment? How in the world are you ever going to retire by putting your money into an investment that does absolutely nothing? And if we see another fall in the stock market like we're probably going to see very soon, like we did in 2008, you're going to lose half of your money again. So if you own stocks, if you're concerned about pullbacks in that type of market like we've seen twice that were devastating in the last 10 years, there's another type of diamond that you could buy that can actually hedge you against that without selling out of your stocks. It's a D flawless white diamond. The diamonds that we carry are perfect D flawless whites. D meaning the color D, which means colorless, believe it or not, and flawless meaning the clarity grade of flawless. These diamonds are spectacular. They are perfect diamonds, the ones that we have, excellent in every category. And they are the only diamonds that are negative correlated to the stock market, meaning that when the Dow Jones dropped from 14,000 to 6,500 and dropped in half and everybody lost most of their money, these diamonds went up 50% that year. 50%. So if you had $1 million stock portfolio and it dropped to $500,000 and you had $1 million D flawless white, that went up $500,000. So it was basically a wash, but you didn't lose $500,000 in the stock market because your diamond made you back all that money. These D flawless whites are spectacular. They're perfect diamonds. We carry them, and we're also supplying the only diamond fund. It's like a mutual fund out of Europe. It's the only one that's ever been done. Now, the rules of this mutual fund is they have to buy the physical diamond, and what they're buying and what the bank is insisting on are 1 to 5 carat, round, brilliant, D flawless diamonds. That's what we have. We cut the majority of those. So the bank recognizes them as currency. They trade at times. They can go up 2, 3, 4 times in a year. And these are the diamonds that we recommend that can save your financial life. Now, they're not inexpensive diamonds. The fact is that they're probably 10 times the price of a normal white diamond, but these are not normal diamonds. These are the best of the best. They represent 0.001% of the marketplace, and again, they're amongst the best investments that you could ever make. We also will resell all the diamonds that are sold in that fund. So, again, if it makes sense for this fund to get off the ground, they're buying these D flawless whites. The bank has recognized these as currency and are insisting that the fund buys the physical diamond. Now, in North America, you cannot participate in the fund, but buying a D flawless white is the same thing. They start at about $60,000 to $70,000 a carat, and they go up from there, depending on the cut and everything like that. So the Argyle pinks, they're going to increase 8 to 10 times what today's prices are over the next 7 years. We're probably going to see these D flawless whites take on a life of their own as the markets get more and more volatile. And then there's the yellow flawless diamonds. They have to be flawless, and these diamonds go up by 25% a year, and they go up by they double every 4 years. They start at about 15 to 20,000. So we have diamonds for most investors. These are phenomenal assets and will protect you against what's coming forward.
Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com. His telephone number, 1-800-432-1022, 1-800-432-1022. One of the big concerns right now in the world is currency wars. And this is something that a lot of people are really starting to talk about. A lot of it is coming out of Japan, because Japan and their prime minister, he wants a campaign of aggressive quantitative easing. And the concern is that, and this is from Art Cashin and others, that they believe a full currency war may be about to break out on a global scale as a result of what's happening with the yen and Japan wanting serious quantitative easing. And Harold, when you take a look at potential currency wars, we've seen it in the past, in the 30s, it's a time then when you need to start thinking about your investments and how they would work in that environment. How would your investments work in a world where we do have currency wars? And we believe, obviously, something like a diamond would do quite well.
Well, it certainly does. Again, as currencies start to change, Randy, certain diamonds or diamonds will become even more valuable and even more affordable because, again, in Europe, as I mentioned before, the British pound is worth much more than the U.S. dollar. So it works basically this way. If somebody wanted to buy a $100,000 diamond, a British pound is not equal to the U.S. dollar. In fact, it would only cost approximately 60,000 British pounds for a $100,000 U.S. dollar. So you can see that the currency market has an awful lot to do with the price of anything, because if your currency is worth more, just for example, when I was growing up in Toronto back in the 70s, the Canadian dollar was worth much more than the U.S. dollar, and we used to go to Buffalo to buy clothes and food and things like that because we got so much more value for the Canadian dollar when it was worth 10% more than the U.S. dollar at that point. So again, the currency market is key to almost everything, and it certainly plays a very big part in the buying and selling of diamonds and other commodities.
And everything has really opened up Pandora's box as a result of the Fed. The Fed, according to Chris Martenson, and I agree with him, is an uncharted territory. Having created a monster it can no longer control. In the process, it is blowing new asset bubbles up that are benefiting from those first access to the newly printed money, banks and corporations, at the expense of savers, pensioners, and anyone else exercising fiscal prudence. This, of course, is creating a vast and growing equality between the top 1% and everyone else. When this misadventure in monetary policy ends, as both math and history says it must, it will be messy, uncontrolled, and very painful for holders of just about every sort of financial instrument out there, stocks, bonds, derivatives. That's why understanding the root causes and the risks of QE is so important in order to identify the best shelters for protecting the purchasing power of your wealth through this transition, according to Chris Martenson. We are identifying this. We're educating our radio listeners to this, not only in Canada, but around the world via the Internet and our radio show, that now is a time to have an insurance policy in your portfolio. If we're right or just half right, you will be very pleased. You'll be able to profit and protect the money that you have based on what's happening with currency wars and quantitative easing. And this, Harold, goes back to diamonds. That's why people, when we have these auctions at hsfineauctions.com, or we're seeing the auction results at Sotheby's and Christie's, that's why we're seeing great results. People are moving into these assets because they're increasingly afraid of what governments are doing with paper money.
Exactly, and that's why we brought this to everybody's attention, because every market has its time. You know, the thing is that back in the 90s, stock markets were strong, the U.S. dollar was strong, the overall economy was strong, and life was good. When that changed in 1999 and again in 2008, everything changed for people. And again, fear started to come back into the market. And when that type of happens, or when those type of things happen, certain assets will increase substantially, and that's why gold, silver increased so substantially. I mean, gold went from $250 all the way up to $1,900. Most people never thought that was going to happen, but it did right in front of everybody's eyes. Same thing with silver, went from $4 to $52, and diamonds have done nothing but go up in price. So again, it's fairly obvious when assets do what they're doing now, why they do it. It's just a matter that most people didn't know about it and didn't really know how to take advantage of it.
If you're concerned about your assets, the paper assets you have, want to learn more about converting it into hard assets, speak with rarecoloreddiamonds.com, Harold Siegel. The telephone number, 1-800-432-1022, 1-800-432-1022. Harold was the first person to bring this market to us. He wrote an article back in 2005, August of that year, Naturally Fancy Colored Diamonds, the Best Kept Secret. There are a lot of copycats that have followed Harold ever since, but he is the preeminent person for rare colored diamonds, naturally fancy colored diamonds in the world today because of all his hard work and all his connections. If you're dealing with one person when it comes to diamonds, speak with Harold. RareColoredDiamonds.com, telephone number 1-800-432-1022. If you look at the reasons to invest in diamonds, as I've said before, privacy, portability, estate planning, price stability, and long-term growth. And Harold, if you look at the big picture, and we have about 4 minutes left in our show here, you look at the big picture of what's happening in the world. We have currency wars. We have in the United States spending cuts about to kick in here March 1st. More than likely, they'll kick the can down the road. They're starting to feel the effects of taxes, the tax increases for the average person down there, and the economy is taking a hit. We're seeing spending cuts in the military in the United States. As a result, their GDP went down. You probably are going to see more of that in the years ahead, according to Goldman Sachs. You can see that chart in our newsletter. The labor market is very weak in the United States. That's why they're doing the QE. Then you add into the mix inflation. Inflation in Argentina, they just put price controls in place. Food inflation is a huge concern. You have governments all around the world running massive deficits, printing money. And yet at the same time, you have geopolitical concerns. Geopolitical is a huge concern around the world with Iran and Israel, North Korea, and the list goes on and on. Especially now, one that is really jumping out is Japan and China fighting over those islands. And there's a huge concern that a war could break out between China and Japan. And Harold, the other aspect to be very cautious on, too, when we look at the big picture here is the stock market. As we touched on earlier, Art Cashin warning that there was somebody who made a very big play for the VIX in regard to volatility in the weeks to come. In the next 2 months on the stock market, we could see a lot of volatility. And it's a time to be cautious when you look overall at what's happening in the world today. When you're looking at the assets that you have, you work hard for your money. Now is a time to profit and protect.
You're certainly right. Again, the uncertainty is certainly there. There's certainly a fear factor, and we just don't want to see the listeners to this radio show, fall into a bad situation. We all work really hard. We've had some success. We put away some money. We don't want to lose it back in the marketplace. I'd much rather be sitting in a GIC, in cash than be in the stock markets and take the risk of losing all my money again at this point. And again, we're going to wake up one morning in the very near future and you see the markets in turmoil, and then people are going to scramble to do what they think they need to do. Let's do it in advance. If we understand insurance and we've taken insurance on everything, let's take insurance out on our financial situation so, again, we don't fall into the same situation as we did back in 2008.
That's very true. Be proactive instead of reactive. One thing that we want to do is educate you on this radio show, and that's why we have our free weekly newsletter. You can get it from Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium. Their telephone number, 1-866-623-2002, website www.pmc.com, or you can get it from Harold, RareColoredDiamonds.com, 1-800-432-1022. And Harold, we have about 30 seconds left. HSFineAuctions.com. We had an auction a couple of weeks ago, a huge success. We'll have more auctions in the future.
You bet. We will be announcing another auction very soon. Again, the diamond market is on fire at this point, but it's understandable why. The whole world is concerned about the currency and inflation markets.
Thank you very much for your knowledge. Another great show, Harold.
Thank you very much. I wish everybody a wonderful weekend and a very profitable day.
Now is the time to take a hard look at the money that you have in your investment accounts. If you don't have an allocation in precious metals, diamonds, now is the time to take a look at doing so immediately. Let Worldwide Precious Metals, earn your business. On the precious metals side, 1-866-623-2002, wwpmc.com. And learn about diamonds from Harold at rarecoloreddiamonds.com. Telephone number 1-800-432-1022. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.